from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, summer travel helped boost Airbnb to a record quarter, but expectations are even higher for the current quarter. I'll talk to CEO Brian Chesky about investors raising the stakes. Plus, Michael Saylor's next chapter. The MicroStrategy co-founder is stepping down as CEO to focus on, wait for it, more Bitcoin. Saylor joins us later to talk about why he's making moves in a continuing crypto winter. And despite record inflation and pressure on consumers, SoFi had better than expected results, bucking a bad news trend for fintech. CEO Anthony Noto will share his view on the macro environment and spending plans as competitors like Robinhood start a massive round of layoffs. We will get to all of that in a moment, but first, tech and biotech fueling a stock surge with solid earnings reports from PayPal and Moderna. I want to bring in our Ed Ludlow to break it all down, and some bad news, Ed, from Walmart. After the bell.
I mean, the news just comes thick and fast, and earnings were good when I first came into the studio. You look at the screen, a lot of red. Booking Holdings, really strong quarter, strong outlook. Bookings back to pre-pandemic levels, and yet the stock now down 4%. It had been higher, but something has spooked investors during the earnings call. We'll dig into that one. Lucid, cutting its full-year production guidance for the second time this year, says it'll only build between 6,000 and 7,000 vehicles. We started this year with their forecast of 20,000 vehicles. Supply chain problems hurting the EV maker. eBay, a pocket of strength, up 0.5%. Strong quarter, strong outlook, showing that actually their strategy of higher-end products and collectibles seems to be paying off. And as you said, breaking news after the market close. According to the Wall Street Journal, Walmart has laid off hundreds of corporate jobs. But what's interesting is there seems to be this idea they invest in e-commerce. That's something I reported a month ago, that they would get more in-store pickers to service e-commerce and curbside pickup plays. Interesting day in the markets, real strength in tech. The NASDAQ 100 having its best day since May the 4th, hence why I'm wearing my official Star Wars tie. Really strong performance in the semiconductor sector. The SOX up 2.7%. And little fluctuation in yields. We're softer on the 10-year by 4 basis points to 2.7%. It's been a weird week. It has been a weird time in recent weeks. If you look at the NASDAQ 100 and how we've traded over the last 10 days or so, periods of momentum, then we're trading sideways, waiting for earnings to show us what the strength of the consumer is, but really popping after some strong earnings on Tuesday in particular. Look at the session during Wednesday, and a couple of names I want to pick out, because I know we need to get to Airbnb, but some pockets of strength and some pockets of weakness. You look at SoFi, absolutely surging, up almost 29%. Strength. They're showing signs of strength when rest of fintech's not. PayPal, another surprise outperformer. Their strategy of cost-cutting working. And Airbnb, interesting. Strong record quarter, strong outlook, very high expectations from the street. One of the laggards, down 1% in Wednesday's session. An interesting one.
Indeed, Ed. We're going to ask Brian Chesky about that. Thank you. Airbnb, as Ed said, just notched its best second quarter revenue ever. The home sharing giant says it's only going to get better. The travel rebound has given hosts more pricing power, with average daily rates now 40% higher than pre-pandemic. Airbnb chair and CEO Brian Chesky joins me now. So, Brian, I have to ask you about the market reaction here, because shares opened down. They've pared most of their losses for the day, but they're still down 30% so far this year. What do you think investors are missing?
I think there's a lot of uncertainty on travel right now. And, but I think the best thing we can do is just continue to tell our story. Our revenue was up 58% year over year. We generated $800 million of free cash flow in the quarter, nearly $3 billion in the last year. And I think one of the things we shared with investors is that our bookings actually accelerated from June to July. So I think one of the things we saw is that there's a lot of demand for Q3, Q4 summer travel, and we're focused on things we can control. So that's what we're doing.
Still, there's some disappointment about your forecast. Still going to grow, but growing the same rate as last quarter. We had Brent Thill, who covers Airbnb from Jefferies, on saying, look, I might be the perfect example of a person. I just took a big trip. Now I'm back home. Maybe I'm going to slow my spending down, slow my travel down, just because of what's happening in the macro environment. How concerned are you about that?
We're not too concerned right now about the macro environment. One of the things we learned was 2 years ago. I mean, we experienced something that we think is going to be much worse than this current macroeconomic environment. When the pandemic hit, our business dropped 80% in 8 weeks. But the thing that was remarkable is what happened next. We recovered really faster than any other travel company. And that's because our model is adaptable. We have nearly every type of space and nearly every type of community. So whatever happens in the economy, people, I think, are still going to want to live on Airbnb. They're still going to want to travel. If they want to save money, Airbnb is a great way to do that. And, we're great for crossing borders. We're great with urban travel, but we also are great for non-urban destinations. So if you want to get in a car and travel nearby, we work for that as well. So I think we're a very adaptable model. And in a difficult economic time, what I remind people is we're actually born in a recession. During that period of time, during the financial crisis, people turned to Airbnb to become hosts. People wanted to save money and seek the value that they got from Airbnb. So we're actually feeling really positive right now.
So Dara Khosrowshahi, I spoke to him yesterday, the CEO of Uber. He said he thinks Uber is, quote, recession resistant. Is that how you describe Airbnb? Are you recession proof?
I mean, we were born in a recession. We dealt with a pandemic where we lost 80% of our business in 8 weeks. We just established that we had a record Q2, and we're feeling really good about Q3. So I think we are as well positioned as anybody for a recession if that were to happen.
Obviously, we've been talking a lot about the companies doing layoffs, big tech companies like Netflix, Shopify, Coinbase. We're just hearing Walmart doing layoffs. I spoke to Tim Cook just ahead of their earnings call. Apple planning to slow down spending on hiring and growth. Also said Apple plans to be deliberate about its spending. Are you changing your spending or investing or hiring strategy at all, given the downturn? What's your approach?
Absolutely not. We are not pulling on the brakes. If anything, I'd be interested in stepping on the gas. And here's why. Because we've been through this movie before. 2 years ago, we had to right-size our business. We made a lot of difficult choices. We got really focused. That's why we went from a company that had negative free cash flow to now positive $3 billion last year. So we are not changing our hiring plans. We are not changing any investment thesis. We are staying really focused, and we've sustained our discipline. We were disciplined over the last couple of years when we right-sized our business, and we are staying disciplined. We're staying focused. And actually, what we're focused on right now is next travel season. We are focused on how can we step on the gas to be prepared for the next travel season.
All right, so what's going to happen next travel season? It's clear from your results that urban and cross-border travel are back. What are the locations, the destinations that are going to be most popular?
Well, I think it's going to be, I thought last year was going to be the travel rebound of the century, and it nearly was. But then, of course, we had the pandemic bounce back with Delta strain. This was an even bigger year. That's why this was a record quarter for us. Remember, this is before Asia's recovered. A large percent of travel is Asia Pacific. That is not recovered because much of Asia Pacific is cross-border and people aren't freely crossing borders yet. Also, urban and cross-border more generally is just beginning to recover. Now, cross-border is double what it was this time last year. But I think that everything is going to continue to recover. Obviously, notwithstanding whatever happens to the economy, I think it's going to be an even bigger travel season next year.
Now, Airbnb closed shop in China at the end of July because it was just so tough to do business there given the zero COVID policy. But you're now focusing on outbound China travel. Do you have any expectation of when restrictions will ease and when that will open up?
No, I don't. I mean, we're not going to try to be in the business of predicting when countries are going to reopen, but we're going to be in the business of being the most prepared whenever they do. So we'll be ready whenever borders reopen. And to be clear, the China outbound business was always the prize. The biggest prize was the Chinese consumer base wanting to travel around the world and stay in homes. That's not really, that's not really a robust business right now because people aren't really crossing the border. But when they are, we're going to be ready. And the way we're preparing is we're making sure we have enough homes in all the corridors. So whether it's Japan, Korea, Southeast Asia, or the other places that Chinese travelers go, we're going to be prepared to have enough homes. And we're going to market them that this is a great option for them.
How much more pricing power do you think hosts can have in this market? I mean, this is the worst inflationary environment that, Airbnb has ever seen.
Well, I think that our business is a somewhat seasonal business. So right now it's peak booking window. So a lot of people are traveling right now. And so because a lot of people are traveling right now, prices will tend to go up a little bit. Now, bookings right now in August are typically for September on. September on is really after the peak travel season. And so that will provide some pricing relief, presumably. So I do think there's going to be quite a bit of flex entering the system as we kind of go off of high season.
There also seems to be a trend in companies buying up short-term rentals in bulk. And I wonder if that makes you at all concerned about inventory.
And what do you mean by that? I just make sure I understand the question.
Well, you've got these property companies, these property managers that are buying up short-term rentals in bulk, which I wonder if that could be more competition for Airbnb or make inventory growth more difficult.
You know, I think that, like, for the most part, I think it's just good to remember the scale that Airbnb operates in. We have 4 million hosts. We have 6 million listings around the world, hundreds of millions of guests. So I think the scale of Airbnb is critical. And I think that ultimately what hosts decide is they usually want to go to the platform where they get the most demand. And they always typically want incremental demand. And Airbnb has probably more demand for homes than any other platform in the world. So I think that we're still going to be the place for people to go. This is the category that we created, and it's it's going to be something that's, I think, can stay really strong.
Airbnb employees might be driving some of that demand. I know, obviously earlier this year, and you announced that Airbnb employees could live and work from anywhere. And I'm so curious the learnings from this policy so far. What's been great? What's been more challenging? Anything that you think needs to be tweaked?
Yeah, it's been a really great experiment so far. I mean, what we announced is that employees can live and work anywhere. We won't change their pay if they move within the country, and we are going to make it easier for them to travel and work from up to 170 different countries. What we found is that, number one, the reaction was incredibly amazing. We've actually had hundreds of thousands of people visit our jobs page, so clearly people want this. I think it's going to open up access to tons of talent all over the world. We've begun to gather employees. Our guidance isn't to only be on Zoom. Our guidance is that we'd like people to be together at least a week a quarter. So what we're trying to do is balance the best of Zoom, the best of real world. And we don't think that's necessarily being in the office 3 days a week. We think that's less frequent, more meaningful engagements. What I've learned is it takes central planning. You don't want a free for all. Whether or not you bring people back to an office, you allow remote work, you want to have it centrally planned. Because if one team does an offsite, that can stop everything if they're collaborating with another team. So I think the key is being really organized, really disciplined. But if you do that, you don't need to be in an office to see people working to know they're getting their job done. You just need to be really organized. The more organized you are, the more flexibility you can offer.
I'm curious for your thoughts on Y Combinator. They're cutting back on the accelerator by some 40%. Obviously, Airbnb was an early Y Combinator company, maybe the biggest success in Y Combinator ever. Does that give you any concerns or pause about, let's say the next 6 to 12 months?
I mean, I think to put in perspective, I think Y Combinator said they're going to reduce the batch size to only fund 250 companies. When I was in Y Combinator, it was 17 companies. So just to put these things in perspective, the scale that Y Combinator operates off of is hard to fathom. I think they funded 4,000 companies to date. I'm not sure anyone has ever funded more companies. So it doesn't give me pause, because I think the scale of still funding 250 companies is such a profound scale. It's more than an order of magnitude greater than we were there. So I think that. I don't know why. I don't know the inner workings of all the details, but it does not give me pause.
Last quick question. I know you're back at your home in San Francisco, but you've been living on Airbnb for some time now. I know I've seen some pictures of you and your dog. Sophie, what have been your favorite destinations, and where are you off to next?
Well, like, one of my favorite ones is Sophie and I went to Ann Arbor, Michigan, where we stayed in a Frank Lloyd Wright home. And who knew that Frank Lloyd Wright homes are on Airbnb? Well, we have actually an entire collection of them under our design category on Airbnb. So that was amazing. I'm actually going to Europe in a little over a week, so I'll be looking forward to staying in some really great Airbnbs as well. And I think I've stayed in like 12 to 13 different Airbnbs by my last count since the beginning of the year. So I've gone to like places all over the country, and it's really great. It turns out you can run a really large public company from a laptop in someone else's home.
I'm going to have to track down your 12 to 13 reviews on Airbnb. Brian Chesky, CEO of Airbnb, always good to have you. Thank you for stopping by.
Thank you. Thank you.
All right, coming up, how China has changed its tone during Nancy Pelosi's visit to Taiwan and what it means for the relationship between Beijing and Washington. That is next. This is Bloomberg. House Speaker Nancy Pelosi ended her visit to Taiwan, pledging the U.S. would not abandon its commitment to the democratically elected government. China reacted, announcing a series of military exercises and trade sanctions on Taiwan. Our Bloomberg News political director, Jody Schneider, joins us now from Washington. So, Jody, what do you make of this trip and the way that it has played out?
Well, it's interesting, Emily, because before the trip, we were hearing a lot of threats from China, from President Xi Jinping directly, and from Chinese officials who warned of grave consequences if Nancy Pelosi made that trip to Taiwan. Xi Jinping, the president himself, said that there would be, that the U.S. and Taiwan would get burned if that happened. But now she went, she got there safely, she spent the night, she met with Taiwan's president and some other government officials and left, said a lot of things about the U.S. commitment to Taiwan. And now China is sort of backing off that belligerent tone and saying, give us some time, have patience with us while we develop our strategy for determining what we do about Taiwan in terms of that retaliation. So it really has been a marked difference in tone in the past 24 hours since Nancy Pelosi left the island.
How are we expecting China to retaliate? We spoke to an analyst yesterday who said we're not going to see it right away, but you're going to see them hold this against certain companies, and this is going to play out over years, not days.
Yeah, I think that's probably right. China is famous for its, having a long view in terms of geopolitical kinds of things and certainly political kinds of events. One thing, there's two different categories. One is military. And while no one expects that China and Xi Jinping are going to try to do something that could be, that would be very dramatic to try to unify Taiwan with the mainland, we do expect that things like missile tests and military drills will certainly be part of this. And they've already announced that. They've said that missile tests could occur at any time to kind of showcase the strength of China's army and China's defense forces. And then also these drills, which they've said will start soon. So I think we will see some of that, but also economic. The thing about some of these military drills is these could disrupt the Taiwan airspace, and Taiwan today complained about that, saying they wouldn't be able to have commercial flights operate the same kind of way. Also, shipping could be disrupted, and China made some announcements today already about how they would not send some products to Taiwan. Also, as you know, tariffs, and it could become economically punitive in some categories of goods. So that could be a real way to try to punish Taiwan. So I think we will see this more over time, and perhaps a variety of strategies being used to try to squeeze Taiwan.
Interesting. Okay, lots of complicated dynamics to continue to watch play out over years. Jody Schneider, our Bloomberg political director, thank you for weighing in. All right, coming up, more companies moving out of San Francisco, including one of the most prominent venture capital firms in tech. That story next. This is Bloomberg Technology. One of Silicon Valley's most prominent venture capital firms has announced the location of its new headquarters in the cloud. Andreessen Horowitz is the latest in a mass exodus around the Bay Area since the pandemic. But as companies relocate, Silicon Valley still remains the top draw for venture capital dollars. San Francisco attracted $52 billion in VC funding in the first half of the year, more than 1/3 of the total. That according to PitchBook. Bloomberg's Lizette Chapman covers venture capital and startups for us. She's with me here now. So it's a pretty big deal that Andreessen Horowitz is moving its headquarters, if you will, to the cloud, opening these offices in Miami and other parts of the country, right?
It's a major deal. This is a watershed moment for Silicon Valley. Andreessen Horowitz, for people that aren't as familiar with it, it's one of the largest VCs with the most under management. They've backed household names, including Airbnb, Roblox, Lyft, as well as Anduril and Coinbase and others. And they employ more than most other VC firms. So for them saying, hey, we no longer need to be in Silicon Valley, green lights that practice for founders who are already finding that working remotely works really well.
So is this the start of a trend?
Well, I would say that it's a continuation of a trend that actually began before the pandemic, and this simply accelerates it. For example, if you look globally, how venture capital was distributed, the U.S. got 84% of the total venture capital back in 2004. In 2021, the U.S. only got 49%. Silicon Valley share of that continues to go down over time, and this is accelerating that. And the reason why is because there are so many new places to get funding. It's not just Sand Hill Road anymore.
So is your expectation that Silicon Valley will still maintain some sort of dominance, but that there will be a lot of mini Silicon Valleys across the United States and really around the world?
Right. I think that's a pretty fair bet. I think that, based on some of the talent here, I don't think it's, likely for, a massive exodus of people to suddenly say, no, we're going to sell all of our homes, rips our kids out of schools and all of that. But, there's definitely competition from other hubs with lower costs of living, lower taxes, and, equal access to cash and talent.
And some of them are pretty loud. I'm thinking about Miami.
Miami's very loud. LA is and LA is very loud, as well as a number of other markets that have been increasingly gaining steam, like including Salt Lake City, Atlanta. You look at some of these other markets that were overlooked by venture capitalists who didn't want to get on a plane or arrange the travel to go and do a seed deal and do the work with the very early stage companies when they really need that one-on-one. They weren't willing to do that. So in a way, remote work makes venture capital more accessible to a larger number of founders that maybe were historically overlooked.
All right, fascinating. We'll certainly continue to follow this trend. Lizette Chapman, always good to have you back on the show. By the way, Bloomberg LP, which owns Bloomberg News, has invested in Andreessen Horowitz. Okay, coming up, SoFi stock soaring after the financial services company posted record quarterly revenue, raising its guidance for the year. Dig into all of this with SoFi CEO Anthony Noto and ask them how they managed it all next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Many fintech stocks have gotten clobbered in the first half of the year, lagging the S&P 500 with growth slowed by COVID. Add to that rising interest rates, pressuring payment stocks and fears over a U.S. recession. It all raises the question of which payment stocks are best positioned to weather the downturn. Our Ed Ludlow back with us. Ed, what do you think?
Yeah, well, SoFi, kind of case in point, right? Look at the numbers, up 28%, biggest jump in the stock since January 2021. Fourth straight day of gains, a really strong top-line growth. Adjusted net revenues up 50% year-on-year, 8th consecutive quarter of positive EBITDA. Bring up the numbers, Mr. Director, and let's look at what the street was really paying attention to, which was this strong guidance for the rest of the year, showing growth for the second half of this year despite changing market and economic conditions, market volatility. Really interesting move into new products as well. Deposits for SoFi Bank up 125% quarter on quarter, relatively new product. Personal loans also up. So they seem to be doing well. They seem to be consistent, is what CEO Anthony Noto had to say during the earnings call. Let's compare year to date versus Robinhood as an example. Had a lot of news out of them this week. They actually would be kind of lagging behind Robinhood, but big jump in the stock today. And investors seem to think that SoFi is one stock that has some momentum in.
Thank you. I want to stick with SoFi now and bring in CEO Anthony Noto himself. Anthony, great to have you back with us. So look, strong earnings, you're bucking the trend here. How do you explain this big uptick in deposits?
Sure. Thank you for having me, Emily. The big uptick in deposits reflects the fact that for the first time this quarter, we had our national bank open. And having a bank license allows us to actually offer the consumer an interest rate on checking or savings that we determine as opposed to a bank sponsor determining it. And we've taken an approach where we really want to be the primary relationship with our members. We want them to be with us for all the major financial decisions they make in their lives and all the days in between. In order to be that primary relationship, we really need to be the place they do their direct deposit. So we're offering them 1.8% interest if they do direct deposit with us. And that's on checking, no minimum balance, no restricted on spending. They could spend when they want. They just have to do direct deposit with us. And that's allowing us to use those deposits to fund their loans at a much lower cost. And so the two businesses are really synergistic. A higher interest rate in checking gives us more deposits at a lower cost, so we can lend more to more people, and it drives a great virtuous circle.
Now, I know you're expecting strong growth in the second half, but you've got a recession looming. We've got all these dire warnings from policymakers, from other CEOs. What are you preparing for?
Sure. Well, we've been preparing for a war since March of 2020. When the global pandemic hit, the president of the United States told federal student loan borrowers they didn't have to continue to make payments on those federal student loans as part of the CARES Act. And that was incredibly important for our country. Well, that had a negative impact on our student loan refinancing business. If you're not paying your student loans, there's no motivation to refinance into a lower rate. So that business went from generating about $2.1 billion in originations 2.5 years ago in Q1 of 2020 to only $400 million this quarter. Well, the reason we've been able to drive record revenue growth this quarter and the prior 3 quarters is because we're a one-stop shop for the consumer's financial needs. So we have businesses that can operate and overcome challenges in one area to another area. As an example, our technology platform business, we're building out the AWS FinTech through 2 companies, Galileo and Technisys. Galileo saw an acceleration in its revenue growth because of the greater need for people to lower cost and use new technology platforms. So we really benefit in different environments. And in this environment, we're seeing great trends in personal loans, checking and savings, invest, strong demand on credit card, and also strong demand for technology services.
Now, you've got the student loan moratorium set to end at the end of this month, but it's unclear what the Biden administration is going to do, if it's going to extend that pause, follow through on this idea of maybe canceling student debt altogether. What are you preparing for there? I mean, does the war continue?
Yes, it does. Our outlook for the second half of 2022 assumes the student loan moratorium continues throughout the entire year, and also that the president does provide forgiveness at about $10,000 for individuals. If that actually happens and it's definitive, we could see a little bit of benefit, but we're not counting on it. We assume the moratorium will continue through the end of the year. But once the government makes a definitive statement, then people can make real choices. Right now, they're doing nothing, and it's actually hurting them. They're not benefiting from refinancing before rates go higher, and they're expected to go higher, so they'll lose some of the savings. In addition to that, they're not sure how much is going to be forgiven or if it will be forgiven at all, so they're not sure if they should refinance at all. So once we have a decision, we'll be able to pivot off of that and go to market in a concerted way. But right now, we're anticipating no benefit of the moratorium ending before the end of the year.
Meantime, we still have what seems to be a deteriorating macro environment. Walmart just announced more layoffs today. Robinhood announced yesterday they're laying off 23% of their workforce. Robinhood is a competitor to SoFi in some respects. I was on this call with Vlad Tenev, the CEO, who said, he anticipated good market conditions would last longer than they've lasted. So that's on me. He used those words. What's your own approach to hiring and other costs? I mean, is there any chance this is coming for you?
Well, we've been belt tightening since March of 2020 when that largest business and our most profitable business got cut by 75%. And so we've been pretty prudent about how we're allocating our capital and what we're investing in. We've delivered 8 consecutive quarters and 3 quarters in a row of record revenue. And we hit GAAP profitability in our bank for the first time this quarter. And that's because of a prudent relationship between how much we invest, what risk we're willing to take, and also dropping it to the bottom line. So we endeavor to drop about 30% of incremental revenue to profits and reinvest 70%. That keeps us disciplined on the cost side of the equation and not build up a fixed expense that we can't cover with incremental revenue.
Meantime, we're seeing bigger tech companies, huge tech companies, Apple, Amazon to a certain extent, encroaching on the fintech space, Stripe as well. How big a threat is this?
We don't really see them as competitors. We are a consumer-facing financial services provider that's using modern technology to deliver that service. We have pretty big moats built around our business. The lending business is really hard to get into. It is capital intensive, and while they have a lot of capital, they don't have the credit and risk and marketing capabilities that we have. In addition to that, people need to trust you. We have spent a lot of money to try to build trust and reliability in our products and services and become a household brand name. Ultimately, when people give us their money, they need to know it's available 24/7 and that we'll be there for them. And that technology is very different than the technologies they deploy today. And so while it's a big opportunity, no one's really captured the financial services sector the way Amazon has retail or YouTube has in the media sector, or we've seen in the travel sector. And one of the reasons why I joined SoFi was I understood what those limitations were and why it hadn't been disrupted. And we're focused on being the winner that takes most in fintech.
Anthony Noto, CEO of SoFi. Always good to have you here, Anthony. Thank you for joining us.
Thank you, Emily.
All right, coming up, Michael Saylor stepping down as CEO of MicroStrategy, but it doesn't necessarily mean the end of the Bitcoin era. We're going to hear directly from him about that and much more coming up next. This is Bloomberg. MicroStrategy is changing up its leadership. Michael Saylor, who co-founded the company in 1989, is giving up his CEO title, saying he will increase his advocacy efforts for holding Bitcoin. Shares of MicroStrategy climbed as much as 17% after this announcement. Saylor will continue to serve as executive chair. MicroStrategy president Phong Le will take on that CEO role on August 8th. Joining me to talk about all this and more is Michael Saylor himself. Michael, great to have you with us. So talk to us about what drove this decision to move on from that CEO spot. Is it the end of the Bitcoin era for MicroStrategy?
No, it's the beginning of the Bitcoin era. We got into Bitcoin about 2 years ago, and it's been a story of great success. The stock is up 123%. We outperformed Bitcoin. We did 3x as well as any other enterprise software company, about 3x as well as any other big tech company. So the shareholder returns have been better than any competitive stock or any competitive asset class. And most importantly, our balance sheet has swelled. We've increased our enterprise value by more than 730%, in essence, from $600 million to $5.5 billion over that 24-month time frame. So now we've got to the next point in our development where we've decided we wanted to have a full-time world-class CFO. And we also wanted to bring one more person in the management team. So Andrew Kang joined us in May as CFO. Phong Le had been the president and CFO of the company. And when Andrew joined, that opened up the door for us to make Phong the president and CEO, and for me to move to the role of executive chairman of the company. Now, some people have written in the news that somehow this is related to our quarterly result or this large impairment charge we took in Q2. It's totally unrelated. The fact is, I've been working with Phong on CEO succession for about 4 years now, and it's always been part of the plan. We finally got to the point where we had Andrew, our new CFO, on board, and we could actually make the change and Phong could be CEO. So I think that the market's responding to the fact that now, instead of 2 executives, Saylor and Phong Le, we have 3 executives. And it allows me to do what I like to do, which is Bitcoin advocacy, Bitcoin acquisition. I'll continue to provide oversight for Bitcoin acquisition as the chair of the investments committee of the board. I'll stay as the chair of the board. And it means Phong, who has been the president and the chief operating executive, he'll just be running the day-to-day business. And Andrew, who's world-class CFO, will be here to help us pursue all of our financial strategies.
Okay, so just for the record then, to those who are speculating that you were pushed out of this role, is there any truth to that?
No. First of all, it's my idea, Emily. And second of all, some people say it's their idea. I'm the controlling shareholder of the company. I have the majority of the voting stock. And so I've been planning to place Phong as the CEO since we made him chief operating officer. That was like 2018. And we made him president in 2020. And at that point, he was running sales, marketing, technology, services, pretty much everything. And he was the CFO. And so that was his 2 years to get comfortable in that role. And we couldn't elevate him to CEO until we had another CFO. It's totally inappropriate to have a CEO and CFO as one person in a publicly traded company. So the catalyst for this is when could I find a CFO, and when would Fong have had the time to season in the role? And both of those things, the plan predates my infatuation with Bitcoin, Emily. It goes back that far, many years.
All right. Still, MicroStrategy lost $1 billion due to your Bitcoin holdings. It's underperforming, the biggest tech companies that are also underperforming. How do you square that? How much is too much for you, or when will it ever be too much?
Okay, well, first of all, it's a non-cash, indefinite, intangible loss. The number that matters to our shareholders is 129,699. That's the number of Bitcoin we hold on our balance sheet. And as I've just laid out, over a 2-year period, our strategy outperformed the NASDAQ by a factor of 10. So we are volatile in the near term, more volatile than a lot of things, but volatility is the price you pay for performance. We could have chosen a more conventional path in August of 2020 and just given $500 million back to the shareholders and operated an enterprise software company that would have been worth about $60 a share. But there's no way we could have achieved superior shareholder returns if we weren't willing to take a risk and embrace that volatility. So the result, as you can see it, is the stock is above $300 a share. It gyrates. We have more volatility in 1 hour, Emily, than we had in 12 weeks before. But I embrace the volatility because the alternative would be we're dead money and no one cares about us.
Now, even Tesla sold 75% of its crypto holdings. And on that day that Tesla announced it, you tweeted, if you sell 75% of your Bitcoin, you only have 25% of your Bitcoin left. Is Elon Musk wrong?
Such a sad day for Tesla. It's, we all regret having chosen great assets. All of my investment mistakes in my entire career where I bought a good thing and then I sold it too soon. And there's never going to be more than 21 million Bitcoin. In 100 years from now, there'll be no more than 21 million Bitcoin. So I think that it's a buy and hold strategy. I think that, Tesla has many other issues that I am not privy to. So it's not my place to criticize them. But I do think that acquiring and holding high quality property forever is a good investment strategy. And Bitcoin, in my opinion, is the highest quality property in the world.
Now, a housekeeping question. You filed with the SEC to issue 450,000 shares as part of an employee benefit plan. Is that going to the new CEO, to you, to other employees?
No, there will be a stock option grant to the new CEO. It's 60,000 shares. But the rest goes to the employees, not to me. I haven't had any stock option grants since 2013, and I work for $1 a year. So we have made a concerted effort to make sure that nearly all of our employees have either stock options or restricted stock units. And that way they share in our Bitcoin strategy success as well as our enterprise business intelligence strategy success. And that's been a highly successful motivational program. It's cut our attrition in half and been great for morale.
So look, I know Bitcoin supporters have been arguing for a decade that decentralized cryptocurrency would dethrone the US dollar. It hasn't happened yet. Will that happen?
No, I don't think it'll happen. But what I do think is there's incredible consensus that the entire world wants a digital dollar, like a stable coin, like Circle or Tether. And they want it because their currencies are collapsing, and 8 billion people would like to have dollars on their Android phone. And I also think there's a consensus that a digital commodity like Bitcoin is a really important asset to stand alongside things like gold or oil or land. And there's incredible demand for that sort of digital property in the world. And so I think Bitcoin will Bitcoin is going to grow as an asset class, as it's legitimized and embraced as an asset class. I think it'll coexist alongside other assets. And I think that there will always be fiat currencies from strong, well-run nation states. But Emily, it is true that in places like Sri Lanka and Venezuela and Nigeria, their currencies are collapsing. And those citizens are going to use the dollar as a medium of exchange for the near term. And if you want a long-term store of value, and I'm saying looking out 4 years or longer, you want property, and Bitcoin is of course that long-term digital property you want to hold as a store of value.
All right, Michael Saylor, always good to have you, Michael. Thank you for stopping by.
Yeah, thanks.
All right, coming up, more on the Twitter Musk saga, why Twitter is asking for records from investors involved in the deal. That's next. This is Bloomberg. On to the latest in the Twitter Musk saga. Twitter subpoenaed records from equity investors and sought information on investors like Marc Andreessen and Ken Griffin and a host of other venture capital figures. You may have seen them tweeting about it. This over Elon Musk's financing of the $44 billion buyout. We should note that Bloomberg LP, which owns Bloomberg News, has invested in Andreessen Horowitz. And here to break it all down for us is Jeff Feely, our reporter who covers the courts of Delaware and who's been very busy over the last few weeks. So look, are these moves pretty common as part of discovery, Jeff?
It's standard operating procedure for both sides in these lawsuits to issue a bunch of subpoenas to banks, equity investors, lawyers, so they can gather the information they need to build their cases.
So we've actually spoken to some of these friends of Elon Musk who've been subpoenaed. One of them is David Sachs, who's actually come on our show a couple of times in the last few months to talk about the potential for this deal to happen. Take a listen to what he had to say.
When you put bots on Twitter and pretend to be someone you're not, when you basically violate the authenticity requirement, you are basically perpetrating a kind of fraud. That is not free speech, that's fake speech. It is perfectly fair game under any kind of free speech policy to take down those kinds of bots. And I fully expect that Elon will be far more effective at doing that than the current management of Twitter because they've been unable to do that.
So, obviously we don't know what kind of discussions they've had behind the scenes, if any at all. But what might the courts be hoping to get from someone like a David Sachs?
Well, this issue of the bots is really where the rubber is going to meet the road. As my understanding, it's very difficult to get very specific numbers on these things because everybody has to deal with them. That's not just Twitter. It's a common problem in the tech industry when you're dealing with this kind of stuff. So it's not going to be an easy argument for Mr. Musk to win on. And the Twitter folks, of course, say that it's all sort of a pretext ginned up so to provide a basis for him to walk away. Judge McCormick is going to be the ultimate decider of all of it.
Okay. What's next here?
Well, we're still in the discovery phase, so we're going to still have a blizzard of subpoenas. Next, we'll start with notice of depositions, and there'll be, probably hundreds of depositions in this case. Bankers, Mr. Musk, the Twitter folks, everybody's going to have to sit down and say their piece. And then we're going to go to trial in October, and it should be quite a show.
A show indeed. We will be following this blizzard of subpoenas, and I know you will continue to be very busy through October. Jeff Feely, thank you for weighing in. Appreciate it. Okay, that does it for this edition of Bloomberg Technology. Coming up later this week, Thursday, we've got Steve Wesley from the Wesley Group. We're going to be covering Tesla's annual meeting. Of course, he was a former director on Tesla's board. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.